This channel is for educational purposes only. Please do your own due diligence before making any investment decisions. Hi, this is Joe Rabil, and I'm going to do my market update. This is actually going to be the last update of the year. I'm going to do 2 videos next week, but they're going to be more in the Tuesday format of providing education. I'm going to go through a couple of things that I think are really important and really respond to a couple questions that I got, and that's how we're going to finish off the year. But let's go ahead and talk about the stock market here, because I think as we flip over into 2022, there's some important developments that are taking place that are likely going to have an impact on the first quarter. So let's just see if we can get into this discussion and take a look at this. So I want to start with the volatility. And what I do is I take for volatility. What I like to do is I've got the S&P up, and the red line that I've got underneath on this bottom scale is a average true range, a 20-period average true range of the daily bars going back, and then I've overlaid an 18 MA on top of that. And when we've got a trend in place to the upside, meaning price or the line is above a rising moving average, the risk levels are elevated. So we want to be careful about when we're in a period where this takes off to the upside and we have a rising line. So when that's the case, when the moving average is rising and that's above, then I would consider the market condition of the market to be a little bit more risky. Whereas periods like this, where it's dropping below a declining line, is a period where it's a little less risky. The number of the amount of volatility is shrinking, and you can kind of see that in the price action through that period. So one of the things I wanted to make sure I covered, though, is what's going on the weekly, because I actually think this might be even a little bit more important. If we go back historically and look at periods where this line is above a rising line, we see some pretty big drops in the market. I think what's taking place right now is we're at the end of a year where the market has been up. So if we look at, here's the beginning of the year right here. We've basically been up all year. We had one dip, really. I mean, these were just minor little pullbacks, really. One dip, and then it turned right around, and now we're kind of consolidating here, and the volatility is going up. So normally volatility will rise like this prior to a decline in the market. So it's not like it's going to happen at the same time where volatility goes up and the market goes down. This actually will happen in advance. In most cases, that's the way it's going to play out. So we've got that condition in place that I think is a pretty big negative, and it scares me a little bit. But it's not a timing tool. Okay, this is not necessarily something that's going to tell us tomorrow that the market's getting hit the moment something happens on this chart. What this is telling us is the underlying condition. Let's go ahead and switch over and let's look at our multiple time frames: monthly, weekly, daily, and hourly. And we know we've got a couple other things in place here that are a little troubling. Number one, we're extended away from the 18-month line. Price is pretty far from this 18-month. So if I zoom in on this, we can see we've gotten far away. We've stayed away for quite some time. And again, I think this has to do with the time of the year or the type of year. Because it's been an up year, it's very rare for the market to drop right at the end of the year, even if it's extended. It'll normally put it off into the new year. And I think that's something we have to be on the lookout for. Now, it's not like we turn over into January and we get in the first week of January and you want to sell right away. There could easily be some spillover strength that takes this up to, say, 500, a big round number at 500, something like that. So we want to be just on the lookout for these things. These are conditions that are in place. The market's extended. We've got increased volatility. We have pretty poor weekly momentum conditions in place. Okay, now What can happen is you can have deteriorating ADX and then get one more blow off move. And this will actually look like it's going up and breaking out. But in reality, it's more of like a climax. So we have to keep that open as a possibility. Unless we break this line, this 18-week line, which has been rising. If we go back and look, it turned up here. And then we've tested it, tested it, tested it. These didn't quite make it. This one was another test because we didn't roll it over. It never rolled over. And now we're testing it again and look like successfully. So we might push up again. As long as this line stays rising, the condition of this trend, which is the controlling trend, the weekly trend, is positive. Now, if this line ends up rolling, let's say it comes down like this, and it starts to roll and turn over with the conditions that are in place and the high volatility, I think there's some risk in the market. Now, that doesn't necessarily mean it's going to fall apart, but it could actually work its way back down to the 18-month for the first time in a long time. And that's really far away right now. I mean, that's at 400 and we're at 471 and possibly 500 before this thing actually tops out. The other thing I like to do is throw on the zigzag. And one of the things I wanted to point out here is notice what's happened here recently. We have an inside swing. So we have this high here on this swing and this low here on this swing. And then we made a lower peak here. And now we're making a higher peak here. Now, if we come up one of two things is going to happen here. Either we're going to take out this high to the upside, or we're going to fail here and then turn back down and take out this low. And in either of those cases, you'd basically take the length of this swing and add it to the move, depending on which direction it goes. Obviously, it looks like, based on what the MACD is doing here and the fact that green DI is trying to go, that there's a pretty good chance we could make it to the upside. And what I have said for about 2 or 3 months now on this channel, as well as other video areas, is that I essentially, when we get this late in the year, when we get into October, November, and the market's had an up year, it's pretty rare for the market to drop. Normally, we'll finish off the year on near its highs, somewhere near its highs, even if it's a little bit higher than this, or maybe it just does. It could still have a little dip and then just finish up near its highs and then have a little follow through into the new year. So that's really what I'm expecting. And based on what the MACD is doing on the daily chart, I think, nothing I see here is telling me anything different. Also want to mention, I like doing these zigzags because I think you can get a pretty good idea of price structure using the zigzag. And I can see this on the hourly chart as well. We had this downward, lower lows and lower highs that switched. And then we tried to get things going to the downside, but then we went to a higher high and then a lower low and then immediately reversed back up. So this is kind of like so when we do this, when we go from a new high, like we did here, to a new low here, immediately, one swing up, we're at a new high, and then immediately go down to a new low, that's a bear alert. So this is a bear alert, but then look at what happened. We've basically retraced the entire thing. So this is going to be a failed bear, probably. But we need to get a swing down that shows up as a swing on this zigzag, and then a turn back to the upside. And that would be, I think, a pretty bullish sign, especially if green DI can hang on a pullback. If it can hold above 25 and a hold above the red, then I think the odds of a kind of a higher low, higher pivot low and new highs is pretty good. So that's kind of what I would be on the lookout for as we go to the next week. It would be preferable if it pulled back first as opposed to breaking out first. But if it breaks out first, still look for that same higher low after that fact. And that can happen sometimes when you go from make a big move to break out. So that's what I'd be on the lookout for right now. Conditions are in place for a little bit more upside follow through. We know the underlying conditions are not that great. So whatever type of trading you're doing, I think you have to be nimble. You can take advantage of good patterns, but I would probably be more inclined to be taking profits a little sooner than I normally would, or when the environment is really solid. So anyway, that's the update for the week. I hope everyone has a great holiday season. You will get 2 videos next week. Both of them, they're very good videos. I think you'll get a lot out of them. And then we'll start talking about the weekend, the market in the new year. All right, take care.